I feel like there's a theme with your portfolio, not with all the stocks, but with a lot of them, where you're going against the grain. So, like when you invested in Meta, it was when people really didn't like Facebook, really didn't like Mark Zuckerberg. Same thing
Yeah,
with Robinhood. Like people were very upset over GameStop. Um, and even with Apple in a way, where people, I think, are just not, they don't find dating apps an interesting investment, you
right,
know?
right. Well, those create the best buying opportunities for good or great companies at great prices, right? So, um, yeah, that's 100% true. It's like, I've been in and out of Netflix twice, and both times my in time has been after the market gave up on them in 2012, and then again in 2022. And they basically wrote them off as if they were going to be dead. And in both cases, Netflix just came back roaring, right? And um, yeah, absolutely. I think those create, if you can find a great company that is being written off all of a sudden for some extraneous reason that is like you feel is wrong, then that makes it an extra good buying opportunity, right? Um, and those are kind of hard to find, but they happen all the time. Like there's at least one or two of them that seems to find their way in front of me every year, right?
That's what I was going to ask is how do you find the opportunities? Like, are you actively pursuing them? Are you just seeing a post about X and then you're doing more research? Like, how does it come across your lap?
Yeah, I mean, it's every one of them has been a little bit different, right? Like Netflix, everyone knows Netflix as a company, but like when they announced their DVD separation, for example, stock just crashed, right? Like so, just the fact that they were on the headlines for going down is the reason they came into my sort of like line of sight, if you will. Similar sort of thing happened with Meta. Again, actually Meta twice as well. Once shortly after it IPO'd at $40 a share, it went below $20 a share, half. So you could buy Meta post IPO when it was a much stronger company. 6 months post IPO for less than the previous round of private funding that they had raised at. And the same thing happened for Robinhood, and these usually make headlines because, Robinhood IPO went out at like $40 a share, roughly speaking. It shot up to like $80 a share for like a day or two, kind of similar to Fig. But then, like within weeks, you could buy it for lower than the last round that Robinhood had raised privately. So all these private investors who thought they were like super smart and they were buying stock in a private company before it IPOs paid a higher price than you could buy Robinhood for a few weeks after its IPO. So, and these things, because of the fact that they make headlines, are uh, end up being sort of relatively easy to find.
What about
It'd be the
companies like
equivalent.